Hello, this is Jordan. This video is being recorded on Wednesday, December 7th, 2022. Thanks so much for joining me today. And in this video, I am going to take a look at silver and mention there's one key price level moving forward, and then also one important indicator. It's a moving average that I'm following. So, long story short, and this is the quarterly chart. Normally, I like looking at weekly or monthly charts, but the quarterly chart is obviously most significant, and it looks pretty similar on the other time frames as well. But there's three key levels for silver that we're looking at basically. Now you have in the high 18s, call it 1870. You can see the blue line going across. There's a confluence of support at that level, and silver traded below it. It looked like it broken below it. Then it stabilized for a couple months. Then it pushed higher in the last couple of months. So as you can see, I mean, it tested and succeeded in holding that significant support. So the second level is $22, and you can see that that's significant and that's the red line, the middle red line. That's the dashed one. And you can see after silver crashed after 1980, then it had this rebound, and that failed around 22 bucks. And then you go to the peak before the financial crisis, or at the beginning of the financial crisis, that was 21, 22, and that's continued to be an important level, 2013 all the way forward. So we have 1870, we have 22, and then we have what I think is the key level, which is really we're looking around 27, 28. I mean, if you look at a weekly or monthly chart, it's 28. If we're looking here at a quarterly chart, it's really 27. So if silver can make a quarterly close at 27 or a little bit above, that's going to be very significant, because looking at that level, once you get silver trading above that resistance, you really only have, we're looking at the quarterly chart, at that point, you really only have quarterly resistance in the upper 30s. So there is some resistance in the mid to upper 30s after 27, 28. But that's really the key level moving forward. And I've been surprised by silver leading gold. The silver gold ratio, I believe, is 78 right now. And even if silver and gold just perform the same, if gold runs up and tests, 2050, 2070, the old all-time high, that probably coincides with silver getting to 27, 28, maybe even 30 bucks. And so what we could see is that gold taking out 2050 or 2100, that's going to be an extremely significant breakout for the sector. Maybe silver breaks above, that 27, 28 bucks at the same time. So obviously that would be extremely significant. So the real key level is 27, 28 bucks right now. We're dealing with resistance at 22. We're trading around that. So that'll be important over the coming months. But 27, 28, that's the level that really separates, getting into a real bull market. And on a long-term basis, that would really reestablish the uptrend in silver, because it had the big move. Now it's corrected over the last couple of years, come back down. Now it's rebounding. If silver takes out 27 to 28 bucks and is trading in the 30s, I mean, then the market is going to be thinking it's going to retest 50 again, obviously. So for all those reasons, 27, 28 bucks, extremely significant. And, on the quarterly chart here, it's $27. So got to make a quarterly close above 27 bucks. Now, as far as one indicator, look at the 400-day moving average, or the weekly equivalent here. And I've shown, or I've highlighted with, rectangles, some points where things could be similar. So I'm showing the other 3 points where silver is coming off a significant low and it rallied up to the 80-week or 400-day moving average. You can see the arrows. So look, it happened at the end of 2001. You can see a couple times it tested the moving average. Then it finally broke through in early 2002. If you look at late 2008, obviously, the crash, and then you had the big rebound. Consolidated a little while, but was able to break above that moving average. And then the next case was late 28 into 2019. So silver rallied up to the moving average, had a decent pullback, and then it didn't break through it until middle of 2019 when the Fed cut rates for the first time in a while. I mean, I could have also drawn a rectangle after the COVID crash low. If you look what happened, I mean, silver had the V rebound, hit the moving average, then it pulled back, then it surged above it. So that was similar to what happened in 2009, but it was even sharper or faster of a move. So here we are again. Silver rallied up to the 82-week moving average, 400-day moving average, and we'll see what happens. I mean, judging from history, it's probably going to pull back, consolidate to some degree, and then eventually break above it. One thing that I'm trying to reconcile is, the macro view that we're going into a recession. The S&P is going to trade lower, and yet silver has been leading gold. So you'd expect silver to be weaker in that scenario. So I think that's one potential risk for silver. Maybe it softens in real terms and it underperforms gold at the beginning of the next leg higher or before the next leg higher, given the macro, what's likely to be the macro driver for precious metals. So that's something I'm thinking about. But nevertheless, technically, if we're looking at what's happening, I mean, this is similar to those boxes that I've shown. End of 2001, end of 2008, end of 2018. Initial rally up to the moving average resistance, then the market pulls back, consolidates for a little while, then it eventually blasts above it. So, I could do more research on, or maybe make some analogs with those 3 with respect to how the market performed after it hit the moving average resistance. So there you go. That's all for this video. Key takeaways: $27, $28 resistance, extremely significant. I mean, that's the big level moving forward. It's likely to coincide with gold's all-time high at 2070 or 2050, whatever you want to use. So that's the big takeaway. And then also looking at gold's performance coming off major lows. First, it tests the 400-day moving average or the 80-week moving average. That's the one important indicator. So those are the things I'm looking at right now for silver. Let me know what you think. Leave a comment. And thanks so much for tuning in. And I'll talk to you guys again in the next video.